people, how the women who were otherwise excluded from the mainstream banking, how we were trying to include them, how we were trying to draw them to the banking fold. So having had an experience of around 20 years like that, and then all of a sudden from Patna, the Reserve Bank of India, the LDO, that's how they are known. So an AGM rank officer, he came to my district and on a Sunday, and he said, sir, now RBI is very particular about this financial institution. Then he said, and we have to do something very serious about it. So how to go about it? And then in the district banking scenario, the DDM of NABARD, I was a DDM of NABARD at that point of time. So a DDM of NABARD and other important banking personnel in the district is LDM, Lead District Manager. So Lead District Manager, the DDM of NABARD and LD of RBI. So almost, I mean, those at the top one who are interested with the role of implementing government's program or taking bank to the doorstep of common people. So the entire functionaries, we gathered together on a holiday, on a Sunday, and we all said, okay. Then he explained to us the idea about financial inclusion, what RBI is thinking about it. And then all of us, we went to the district magistrate, as it is known there, DM. Here in this side, northeast states, it's known as DC, Deputy Commissioner. So we went to his office on a Sunday, his residence office, and then we said that this is the kind of situation. So RBI is now thinking about something called financial inclusion. So that was the time. Why I am trying to share this anecdote with you. So nearly 15 years from that point of time, how we have moved, that will give you a perspective about financial inclusion. So we said that, look, our job is, what we have come here for is that every household should have a bank account. So that was the target given by RBI. And this is what at that point of time was meant as financial inclusion and how to go about it. So the DM in his natural magistrate style, he said, okay, you can take the voters list, and based on voter list, you can open the account. So this is how it all started. I mean, it's just in a lighter way. I shared with that story. The idea is only, so this is how I was involved with this financial inclusion thing at that point of time, what we thought financial inclusion would be and what it is now at this point of time. And the name of the session is Financial Inclusion and Financial Literacy. So maybe that literacy is a keyword. So that also we'll see. Perhaps we were not that literate, because I, being in front line of implementing the idea of financial inclusion, I myself had my own doubts. Why do you want to have an account of an individual when through self-help group, which I have been so assiduously doing, going to the villages, not the very idea of a self-help group was not to have everybody's account. Idea was how to bypass this normal formal banking so that everybody is included, everyone is in the banking fold, even though she or he does not have a separate bank account. So that was the whole idea of SHG. And then, as an individual, as an officer of NABARD, I thought that my entire my organization's entire endeavor of doing this SHG, that is going to be defeated by this financial inclusion. So, I mean, this is how we all started. So this was just to put the things in perspective, and this is a starting point for us to discuss about the financial inclusion and financial literacy. So at that point of time, we thought that by inclusion, it's not that there is no denying a fact that there should be a relationship between a bank and an individual. How that we were trying to do through self-help group. Later on, self-help group, side by side with it, also we were doing joint liability group. So that was also an attempt at this, the same mindset inclusion. And to us, it was really baffling what we have been doing so far as a banker, as a government banker, I should say, because at that point of time, maybe that private banking had also not become that fashionable when we came into the banking fold in 1984. Only after 1992, after the liberalization, the idea of private banking and that modern kind of banking, branchless banking, and all those things that came into being. But prior to that, as a government banker, what we were thinking, what was baffling to us when this idea of financial inclusion came to us was, what have we been doing so far? We have, if we are not doing financial inclusion, then what else we are doing? In 1905, or the beginning of 20th century, we had cooperative banking system. And cooperative means the grassroots level people, they had their own banking structure that was to cater to them, or what we call, that was to have a relationship with individual. So that was also an attempt at inclusion. Later on, when the idea of nationalization came, the Imperial Bank became a State Bank of India. Reserve Bank of India, from private, it became a public sector entity. And then nationalization in two phases. Already we have seen in 1969 and 1980. Then the idea of regional rural bank, a separate bank. What these all attempts were, if not at including the people finances. So that was something which appeared very weird to us at that point of time. But then after that, after financial inclusion, the concept of financial inclusion came, and then how we have moved, that we'll see in the presentation through the PowerPoint that I will be sharing with you in a short while from now. And then we'll see that how we have tried to formalize the whole thing, how we have the Reserve Bank in particular and other organizations like NABARD, how we have spent so much of energy on creating institutions, creating funds, so that more and more people are financially included. Because it all started when we delved further deep, when we started the exercise of opening no-frill account. Then we came to know how many people were outside the fold of formal banking. So with this, I will request the host to please allow me to share my screen. Yes, please.
Yes, sir, done.
Thank you. So first of all, we'll make an attempt to define what financial inclusion is. Financial inclusion we can define as a process of ensuring access to appropriate financial product and services needed by all sections of the society in general and vulnerable groups such as weaker section and low income groups in particular at an affordable cost in a fair and transparent manner by mainstream institutional players. I was giving you an example of financial inclusion by quoting something called self-help group. So self-help group is what? Self-help group is a group of say 10, 12 persons up to 20 persons who form an entity which opens an account with a formal banking system. And through one account, through one savings account, the entire group, all the members of group, 10, 12, 15, up to 20. So these groups are included in the banking fold. So this is how we were doing. Now, here, as per financial inclusion, some of the keywords we'll see. Ensuring access to appropriate financial products and services. Now, when I'm saying appropriate, means maybe because what we have tried to do in SHG, we have tried to open a savings bank account. Later on, we will have an arrangement of loans for those members. So that will be known as microcredit. But what if the member is in need of insurance? How to address that? So for that particular member, the appropriate product is insurance. There could be someone in our society who is 70 years of age and with not able-bodied to earn income for himself. So what he or she needs is pension. So that is the appropriate financial product or service for him or her. So financial inclusion is ensuring access to one of such financial products and services. Secondly, we have been doing banking and in different lectures. Also, I have discussed that how banking as an arm of so to say, of course, without meaning that, what I mean to say is that a capitalist system, a big business house, which is having an industry, it will like to have a kind of assured financial services, a loaning to its unit, a manufacturing unit. It will have its own bank. Or even otherwise also, those of you who may be having credit cards, you will be really surprised to get the number of calls every day. Or maybe some companies like who are in promotion business, or maybe some call center kind of thing. So they will be calling you whether you require loan, whether you require credit card, whether you require health insurance. So that kind of thing, but that kind of thing is offered to you because they know that this is the section which is profitable for me, but not so in the rural areas. You go to a rural area and you find that most of the people, most of the farmers, most of the villagers, they will have one complaint that they are not given finance by the banking system. So the key word here is vulnerable groups and weaker section and low income group. For them, readily bank services will not be forthcoming. So by financial inclusion, we are looking at that particular section to serve that section which is otherwise not served and which is otherwise what is known as financially excluded. Another thing is that, like I said, that credit card business or call center will be making a call because they know that they are able to get enough business, they are able to get enough profit out of such customers. But then in the process, maybe if any of you have tried to see the kind of interest rate system for a credit card, they talk in terms of the rate per month. They don't talk about annual rate because they know if they say that 3.65% monthly, if they talk in annual terms, it will be something like 40%, and people will be alarmed. That is why they talk in terms of monthly rate. So the idea of financial inclusion, the very idea of financial inclusion that we tried to do from 2006 onwards, 2005 we had come and we started our exercise in right earnest about financial inclusion with RBI and the banking system. So it should be affordable, and finally it should be done in a fair and transparent manner by the mainstream institutional player. The idea is, it's not that vulnerable section, villagers, they are not getting loan, but at what cost? From whom? It may be a lender, money lender of village, who also charges in terms of monthly interest rate. And my experience with the same SHG, same self-help group, they were telling that okay, yes, we are paying 10 rupees. 10 rupees means 10%. Okay, fine, that's very good rate. Now that rate in 2005 or 4, it was 12%. So you are getting very cheap. No, not cheap. Then what their meaning is that 10% means 120% because that was the monthly rate. So money lenders, they are able to access only because, or they require to go there. The only reason is that they are not able to get the mainstream institutional player, which is in a position to finance them at 12%, 14%, 10%, and not 120%. So the idea of financial inclusion is that mainstream institutional player who have a particular kind of interest rate structure, they are in a position to serve the populace. Now, having seen the definition, now we'll see that we have come to know that what financial inclusion is, and this is how we will try to break the thing. So first of all, financial inclusion is ensuring access to appropriate financial service. And by financial service, as I discussed, it could be savings, it could be credit, it could be remittance, it could be pension, it could be insurance, and above all, it could be also the need for literacy. You have everything on demand side, on supply side, what I discussed, all those things. You have a savings product, you have a credit product, you have a pension product, you have an insurance product, but you do not know how to go about it. So financial literacy is also a very important component of financial inclusion. So first point that we come to is to the appropriate financial service. The second item is to the vulnerable group of people at an affordable cost. That's what we have seen just now. What we are talking about is, I mean, it's not that by financial inclusion, we don't mean the richest rich class. What we mean is that it should be universally available. It should be, the inclusion should be, financial inclusion should be universal. The financial services are within the reach of everyone. It should be universal. The third component that we have seen in the financial inclusion is that it is done in a fair and transparent manner. It's not that, because why this fair and transparent comes into picture, because you also may be aware in your area, and particularly in even some of the advanced states as far as the financial regime is concerned. States like Andhra Pradesh, Telangana, and Tamil Nadu, there have been a mushrooming growth of microfinance institutions. Even in Assam also, maybe 6 months back, there were a lot of uproar in rural areas about how microfinance institutions were making fool of our people in rural areas. So the idea is that the entire thing has to be fair and transparent. If it is interest rate, it should be what it says. It should not have like something in a very crude manner. I said that 10 rupees, 10 rupees and 120%. So it should not be something like that. What it should be that what is on paper is what is meant by the system. If 10,000 is to be given, means it should be 10,000 rupees only, not a pi less. Then another keyword that we saw was by mainstream financial institutions. Mainstream financial institutions mean public sector banks, private sector banks, even maybe MFIs. Now we have other kind of universal banks also, like Bandhan Bank. They are as far as rural areas are concerned, as far as financial inclusion is concerned. So these banks have also been playing a very important role, particularly the Bandhan Bank. So what we mean is, in financial institution, the mainstream financial institutions should be playing an important role. Now, we have seen that appropriate financial services. Now we'll try to dissect the financial services. The first one, like I was discussing about with you about my initial experience. I said that the RBI, what they wanted in the first place was opening of a no-frill account of everyone. And there, at that point of time, we went to the collector, the DC, who said that the only way you can know whether everybody had an account or not, whether everyone whose name is included in voter list is figuring there or not. So we thought of opening what at that point of time we said that no frill account. Now, of course, this account is known as BSBD, Basic Savings Bank Deposit Account. No frill, deliberately I have put in inverted commas so as to put it in perspective. This is how all of us started as far as our journey of financial inclusion is concerned. And this BSBD or Basic Savings Bank Deposit Account, which should be suited to every household. So savings bank account is the first financial service that is required for treating as a financial inclusion, and that is why later on when we saw that in 2014 a massive drive was started in terms of opening PMJDY, Pradhan Mantri Jan Dhan Yojana, means every household should have an account. So many accounts were opened, and now even in the current crisis, migrant crisis and all, when the government wanted to transfer the money, these accounts actually came handy, and their amount could be credited. So this is how it has helped, and this is how we have seen the advantage of financial inclusion, the practical impact of doing the financial inclusion. The second service that is needed is money transfer facility, remittance. Here again, now in last 2-3 months, migrant laborers, that has become, I mean, common knowledge to all. Everybody now knows about who migrant labor is and what are their requirements. And one reason why they had to move from one place to another, the place of their work to their village, again from village to place of work, was that perhaps they did not have a seamless money transfer facility or the remittance system. Like those who are financially included, those who can afford a better financial service, for them absolutely no problem. Someone's children living in Kota, doing the study there, maybe his parent in Imphal or in Guwahati would be easily in a position to transfer money to his or her account in Kota or Kanpur or Delhi, and that money can be used, but not so with the migrant labor or the deprived class. So this money transfer facility, the remittance, assumes an importance there. And precisely for these ideas, later on we will see that some of the institutions that was permitted by RBI, what was known as the small finance bank and payment bank. So these were the payments bank, they were meant for these things mostly. And they were all attempts at financial inclusion. So remittance is another financial service that is of much importance. You may be, some of you may be recollecting the days of purchasing the demand draft for filling up any form. You have to purchase a demand draft, and that used to be a really mammoth kind of job, standing in queue, and then first half you go to the bank, deposit money, then again your call in the second half, and then you get the demand draft. Now, of of course, the technology has done its bit, and it is much easier. But then, when we talk about the vulnerable section, for them still the issue remains. So this financial service is of very great importance, and for a financially included vulnerable class, this service may be of much need. And the third, that is because initially when we were, like I was telling you about SHG, two things I talked about. One was saving, they were having a savings account, and having had savings account for some time, they were eligible for getting loans, or what was known as microcredit, because the amount used to be small. And in fact, in financial service, everything is micro only. It's a savings account, it's a micro remittance, it's a microcredit, it's micro insurance, it's a micro pension. So everything is micro, because the amount involved is very little. So a small loan or overdraft, that is also one financial service that is of much requirement to the vulnerable class. And that is why under PMJDY2, we had the provision of, with each account, BSBD account, there will be a debit card which will have a built-in insurance system if you use that card, and based on that card, based on that account, they were also eligible for a small loan or a small overdraft. So the microcredit is the third financial service. Then the micro insurance, both health insurance as well as life insurance. That is of very important. That is a very important thing, and there has been some attempts or other even before this financial inclusion thing. There used to be crop insurance. The idea was that in case of crop failure, the farmers should not suffer. So that is also in the nature of financial service. Now, under micro insurance, under the government scheme, what we know as Prime Minister, JJB, Prime Minister Jeevan Jyoti Bima Yojana, or life insurance, accident insurance. So all those things have been formalized under financial inclusion program of the government. And as I was telling, the micro pension, which again, government has also made effort to formalize it. That is known as Atal Pension Yojana. That will be, of course, dealt with separately. But these are the financial services, these are the components of financial service as far as financial inclusion is concerned. And up to now, up to savings, remittance, microcredit, micro insurance, and micro pension. These are what is known as the demand, the supply side components of financial service. Means this is what you give, this is what the system gives, or this is what the system has to offer to a person, a vulnerable group person, or a deprived person in the context of financial inclusion. But these services, those are the things that can be made use of only when you have got the knowledge, only when you have a demand for it. And this demand is managed by the demand side component of the financial service, that is financial literacy, that we'll see at the end of my discussions. Now let us see. So having come to have some discussion about the idea about what financial inclusion is, how it can be defined. Now we come to the background under which the entire the efforts that we made in 2005. What were those important things? So that was the background. So what was the extent of financial inclusion? Let us see. That time NSSO, the sample survey, they had conducted the survey and they had come to this conclusion that only 40% of the population across the country had bank accounts. Proportion of people having any kind of life insurance cover was as low as 10%. Means 90% of the people did not have life insurance. And insurance or micro insurance, as we said, that is an important component. And we all know, even from banking point of view, even from financial point of view, if the loan is not insured, then bank is also in danger of losing that money. So otherwise also, I mean, the next of the kin, it should have that income coming to it, so that the liabilities which may have accrued could be paid off. So insurance as low as 10%, and non-life insurance was absolutely low. Non-life insurance means even health insurance as low as not even 1%, less than 0.5%. And only 13% of the people had debit card. And only 2% of the population was having credit card. And I told you, we know by our experience that credit card companies, by virtue of their structure, they would like to do the business with only the class which is in a financially better, in a financially sound condition, and not someone who, according to their assessment, is in a position to repay them, or who may have the potential of default. So only 2% of the population was having credit card. So that is the extent of financial exclusion. And that was the study that was done, that survey was done in India. But in fact, the RBI, they woke up, and they became so serious as they had to send their officers to field to start it on a war footing. There was a worldwide a kind of movement for tackling this financial exclusion. So that is why we became so serious at that point of time. So first time it was used in RBI's annual policy 2005, what I was telling in my the initial anecdote, that what actually happened with me. So RBI had become so serious that in the annual policy statement, it was discussed, and it gained prominence after two committees were set up. One was HR Khan committee, which was set up in 2005, and then again C. Rangarajan committee, which was set up in 2008. Then with what I was discussing a short while back about the Prime Minister Pradhan Mantri Jan Dhan Yojana, PMJDY. So with that, the government's mega program from August 15th August 2014, when Shri Narendra Modi, he became Prime Minister, and his first speech from the ramparts of Red Fort, that time he said, he talked about this financial inclusion in his own way, in government's way, and that was the mega program which had PMJDY, Then gradually the entire edifice was built on the technology, and that was known as JAM. JAM means mobile technology, means Jan Dhan Yojana, J, and A means Aadhaar. So Aadhaar captured your database, mobile was the tool, and Jan Dhan Yojana was the base. So this was the power of JAM. Based on that, it was thought that everybody will be brought into the system. Everybody will have a linkage with the banking system, the financial system of the country. And then after that, we had DBT, direct benefit transfer. And then about the gas, the cooking gas, that PAHAL scheme. Then Pradhan Mantri Jan Dhan Yojana of 2014, August 2014, it was done. And then two insurance schemes. One was life, one was life insurance, one was the accident scheme. That was in 2015. Then we had Fasal Bima Yojana. Earlier it was known as crop insurance, and then it was now known as Pradhan Mantri Fasal Bima Yojana. Then three pillars of financial inclusion are accessibility, affordability, and utilization. The services which is offered should be accessible to everyone. It should be affordable in cost, and it can be capable of being utilized. So now let us see what are the efforts, what are the measures which have been taken in the direction of implementing financial inclusion program. So Government of India and RBI stepped up a series of measures. Let us see what are those. One was first committee on financial inclusion was set up, and its recommendations were implemented. There was a simultaneous focus on financial access and financial literacy, considered at two twin pillars, because as I discussed, one set is of in the nature of some supply side items, and the other is the demand side item. So financial literacy is basically to create demand for the financial services, financial products. And product services delivery to address supply side and literacy to tackle demand side. And measures to improve for improved reach, improved access, better products and services, and transparent transactions. So these are some of the initiatives which have been taken. Let us see some of the committees. First committee was Committee on Rural Credit and Microfinance, which was set up under chairmanship of Sri H.R. Khan, who was Deputy Governor of RBI. Then Committee on Financial Inclusion, which was set up in 2008. It was again under a Deputy Governor of RBI, who later on went on to become Governor of RBI, C. Rangarajan. And third was Committee on Comprehensive Financial Services for Small Businesses and Low-Income Households, under Sri Nachiket More, who was also a Deputy Governor of RBI. And the Committee on Medium-Term Path on Financial Inclusion, that was set up in 2015 under the chairmanship of an ED of RBI, Mr. Deepak Mohanty. So major recommendations, let us see some of the major recommendations, because two committees are very important, HR Khan committee, because with those recommendations only we started our journey of financial inclusion. So Rangarajan committee, they talked about creation of FIF, or what is known as a Financial Inclusion Fund, and that was a fund that was created by Government of India with the membership from commercial banks, from RBI, and it was kept with NABARD. So of course that committee, there was a committee that was considering the proposal and recommending release from this fund. But this fund was maintained in NABARD, and they were issuing the fund, issuing the money from the fund. Then at that point of time, also for technology, because I talked about CHAN. So they are the mobile technology. The technology was to be a pillar of financial inclusion, because they knew that it is otherwise not possible to have everyone come to the fold physically. So technology was leveraged in a big way, and to the institutions or what we know as rural financial institutions, which are otherwise financially not that strong. So we had this fund, Financial Inclusion Technology Fund, under NABARD, that was recommended by Rangarajan committee. Of course, later on, out of which the technology initiatives were, technology innovation and technology costs were funded. So later on, both the funds, FIF and FITF, Financial Inclusion Technology Fund, they were merged, and now it is only one fund known as Financial Inclusion Fund, Financial Inclusion. Then use of VFs and VC, because it was a brick and mortar branch, as we say, that they knew that could be impractical in the short run, and also may not be very economical. So they had to look for either through technology or some alternative physical means. And VC and VF, or what is known as banking correspondent and banking facilitator, so this means they wanted to reach the last mile, that is to include the excluded people. Then SHG program, I discussed I gave some reference about SHG. So SHG program was to be strengthened, because that was also in its own way, it was an attempt at financial inclusion. And then also I discussed about, I talked about, made a reference about rather joint liability group. So that was also a kind of, that was also a group, but for a limited purpose of taking loans. So that has to be, that it was decided that had to be encouraged. Then branch expansion in rural unbanked area as far as possible, so that more and more people come under banking code. Then agent banking through BF and BC, as I have said. And then ultra small branches and kiosk banking means maybe if you don't have a full-fledged branch, let us have some someone with a laptop in a kiosk where you have limited facilities. I mean, it will not be manned the way a branch is manned, but then there will be enough number to take care of. There will be enough, maybe through technology or other means, there should be enough services available, so that the people in far-flung areas, people in villages, they get banking services. Then KYC norms were relaxed. I discussed about KYC the other day, and also discussed about it for BSPD accounts. So for some time, till it becomes a regular account, and till certain conditions were not fulfilled, like transaction going above a certain threshold, then that of course KYC will be required. But other than that, KYC normal requirements will be waived off. And then the other products like KCC, GCC, and overdraft account. Then roadmap, or what was known as FIP, Banks Financial Inclusion Plan, to which they had to submit the plan how unbanked villages will be covered. So that the idea was that more and more people are brought within the fold of banking. So financial inclusion plan for bank, or what is known as Swabhiman. Then NPCI because we have seen that how technology could be useful. Through technology, we can have a better financial inclusion. So that NPCI, they were supposed to play a great role. So that was the initiative taken. And then a dedicated fund that I just now discussed about it, FIF, that was with NABARD. So, and then BC, or business correspondent, that was a very important pillar about of the entire financial inclusion program, because it is through them that more and more people were offered banking products and services. So BCs are a banking channel just like ATM is, because through ATM you need not go to branch, but still your cash needs will be fulfilled. Likewise, BCs were also doing the same type of functions. But ATMs or credit card or debit card or internet banking, so you were able to do banking without actually having to go to a bank branch. But through BC, because everybody does not have that privilege in our country, we know. And the entire program, as we have time and again emphasized, is that vulnerable section, weaker section. So maybe they are not that privileged that to have internet, have the luxury of internet banking or debit card or credit card. So the BCs, the institution of BC, they will be working just like a branch and like any other channel with a human element. So as if they are the branch themselves. So they meet the requirement of low income group through doorstep delivery of financial services, and banks are reaching out to far-flung areas. BCs are considered to be just the substitute of a bank, or they represent bank for every act of their omission and commission. Banks have to own up the responsibility. So banks are fully responsible for their action. So that was to instill confidence among people that they are simply the substitute of bank, and absolutely they are not at any kind of risk by having transaction at their outlet. And that transaction is on CBS platform, means the POS machine through which the transaction is carried out, immediately that will reflect in the base branches system, and the transactions are carried online. Business facilitator is an institution which will have some additional items, means they will not be a part of banking system, so to say, like BC, but they are a kind of facilitator, like they will fill in the form. Just I'm giving an example, not many examples I will give because I'm running short of time. So they will fill in the form and send it to branch, and after that their role is off. They are no longer in the picture, and then bank comes directly in contact with its customer. So they are a kind of facilitator. However, in actual practice, BC and BF, business correspondent and business facilitator, that distinction is blurred, and BCs sometimes BCs only are playing both the roles. So a business facilitator could be NGO, Panchayat, SHG, cooperative, PO means the producer organization, AC and ABC, even Bank Sakhi, Bank Mitra, all those concepts, they also have come side by side with these things, BCs and PMs. And they are the service line identification, means they are, the idea is business facilitator would be selecting, identifying the borrowers and then bringing borrower to the doorstep of banking. After that, their role is over. After that, the bank will be doing direct business with the customer, with the borrowers. And they also do awareness creation and debt counseling and post-sanction monitoring. Sometimes is given, and monitoring and hand-holding is done. Then these are some of the banking options. I mean, JAM, I talked about, no, JAM. So these are some of the pictorially I am just trying to depict. So these are some of the channels, and this is how, if any of these channels you have been using, means you are included financially. So we have seen the financial, the supply side of financial inclusion, micro savings we have seen, micro credit we have seen, money transfer facilities we have seen, remittances, and then micro insurance we have seen, micro pension we have seen. And now coming to the final final leg of my presentation is what is known as financial literacy. So the demand side is financial literacy, even though we may be providing all the channels. Just now, 2 slides back, I showed you through one of those channels you can you can make use of that and be financially included. But unless you know about it, you will not be able to do. So that is why demand is required, financial literacy is required. Unless there is a demand, there will be no use of making a supply of the financial services or providing all those financial accesses. So financial literacy is basically a program through which demand is created for financial products and services by making common man aware about their needs and benefits. It also enables people to avail the services which accelerate financial inclusion. Ultimately, a poverty alleviation program leads to financial empowerment and turns out to be a good business opportunity too. So let us see some of the financial literacy initiatives. In fact, I talked about Financial Inclusion Fund a short while back. So through that, many exercises have been done in rural areas through different RIFs, or what we know as rural financial RFI, rural financial institutions, through LDM office, through banks. They are having the institution called financial literacy, a kind of department, a personnel who is entrusted with the job, and some of the expenses relating to the expenses of financial literacy program, those are born out of the Financial Inclusion Fund that I discussed a short while back. Now let us see some of the, because RBI, I told you that my discussion I started with the RBI is starting this program of financial inclusion. So RBI has been there in a big way, and now they have got a separate dedicated web page given to a financial literacy initiative. And let us see some of the financial literacy initiatives of RBI. One is FAME. So RBI booklet of messages, which gives you messages something like, I mean, that's just, these are all for creating demand. a document to be submitted while opening a bank account. So making one aware, making a customer aware about their roles, responsibilities, duties, what they have to do. What is the importance of budgeting? If you don't do budgeting, if you don't budget it, you whatever loans you get, you will simply blow it away, and that will be a burden on you. You will be under the coercion of the bank when it comes to recovery. And then saving and responsible borrowing, maintaining a good credit score by repaying loans on time. So these are the messages through RBI booklet, and knowing how to lodge complaint at the bank and the ombudsman. So these are some of the messages. These are some of the initiatives which RBI thinks is important, so that people at large, they are in a position to utilize bank services. And finally, usage of electronic remittances, because now we have gone far ahead from the days of when you have to waste the whole day for getting one demand draft. Now within seconds you can transfer lakhs and lakhs of rupees through RTGS and NEFT and all IMPS and all. So now finally we come to what are the initiatives, financial literacy initiatives. One is RBI has prepared some of the content which are tailor-made for the particular target groups. Live and audio-visual aids are there, like target groups which are farmers, SHGs, small entrepreneurs, school children, and senior citizens. So as far as financial literacy is concerned, age is no barrier. It is equally important for senior citizens, for old people, how they make use of their money, how they should be using it, how they should be using financial literacy, financial inclusion channels, how they should be using financial services. Then they are also having audio-visual aids on basic financial literacy, UPI, then going digital, then through posters are on UPI and 99 USSD, unstructured supplementary service data. So they are having posters on this. Then pictorial book series also they have. One is Raju, other is known as Mani Kumar. Then other initiatives are banks to have their own financial literacy centers or counselors. And I told you about that financial inclusion fund. So money is paid out of that. I mean, some investment is made out of this. And then LDMs, RRBs, rural cooperatives, and in fact, all the banks should have financial FLC counselor, financial literacy counselor. So FIF is maintained with NABARD to fund the FLCs of RFIs. So NABARD is giving some assistance, financial assistance for a limited period, of course. And we intend from NABARD, it is intended that banks and financial institutions, they will be realizing the importance of financial literacy counselor and the benefit that it accrues to them in terms of more customership, in terms of better utilization of end use of their funds and better repayment. So they will be in due course of time maintaining their own counselors, the financial literacy counselors. So this much as far as my presentation is concerned. And now I'll go to straight. I will go to the chat section to see if some questions are there, and otherwise I will close the thing. Yes, who can offer bank services to unbanked area? Look, this is never intended that any area should be unbanked. So bank services are to be necessarily rendered by bank themselves. But for the time being, that is why banks were asked to have a financial inclusion plan, to have their brick and mortar branches, as it is known, or some other channel to render bank services. So any area, the idea of financial inclusion is to make financial services universal. Everybody should get the service by some bank or other, or what was known as mainstream players. So a bank has only to do, yes, for the time being, for the intermediary period, just replying to your question, you may have ATM, you may have kiosk, you may have PC, who will be providing the service. So I think I have answered the question. And with this, I thank you. I thank you all for the patient hearing. Slightly, I have exceeded my time, but thank you very much once again. Have a good day.